Well, just about everything is being slashed in the retail sector at the moment, including profits and share prices. Retail stocks plummeted today, shaken by a profit downgrade from David Jones. DJ's was the biggest casualty, plunging 18%. Its boss, Paul Zara, called it the perfect storm, with consumer confidence low and saving rates high. Emily Stewart reports.
The streets are crowded, but despite the sales signs, not enough shoppers are being tempted by the good deals.
Yeah, we're spending a lot less because, there's bills to pay.
Retailing's been pretty tough at the moment. Industry-wide, things aren't good, and department stores in particular aren't strong.
That mood was reflected on the ASX. Myer fell around 7%, its lowest price since listing on the stock exchange in 2009. But the biggest casualty was David Jones, which fell by 17%, a two-year low. As Lateline Business reported last night, David Jones has slashed its profit guidance because of poor sales across all departments during the key clearance period.
We saw a decline in May, but slight negative sales, but we saw a significant decline in June and July, and the results were certainly unprecedented as far back as our records can show.
There's a lot of pain out there at the moment. There's a lot of confusion. I think we have a range of factors. Employment is still strong, but we're seeing the impact of higher property prices, higher utility costs really creeping into the market now.
David Jones was expecting second half profit after tax to be up 5% on the same period last year, but it's now forecasting a decline of up to 12%, which would mean full year profit would sit at around $168 million. The company has also slashed its profit expectations for the first half of the 2011-2012 financial year.
We've got a declining customer traffic and declining transactions. That's telling you the story that people are not responding or actually entering the store.
The downgrade prompted Myer to reconfirm its guidance, and in a statement the company says it expects trading conditions would remain challenging for the remainder of the 2011 financial year. And it expects net profit after tax to be down by up to 5% to around $160 million. The Westpac Melbourne Institute of Consumer Confidence Index has fallen to its lowest level in 2 years, and the higher income bracket, which is David Jones's target market, is down 11%.
We're starting to see a very wide slowdown, not just in those lower end, medium end. We're starting to see widespread conservatism amongst consumers.
David Jones also points to deflationary pressures, the onslaught of new taxes, and the growing importance of online shopping to explain dampening sales.
We do seem to do a lot more internet shopping now, though, than we used to.
You can look at a range of different brands and prices, so I must admit I do a lot of shopping online now.
But analysts say it's still only a small market.
The internet has been overplayed a little bit. I think Australian consumers are generally just moderating their spend.
It's retailers like Spanish chain Zara that are putting department stores under pressure. With cheap prices and new stock arriving every 2 weeks, it's a model that's proved very popular with customers.
David Jones seem to have got themselves into a spiral where price has become an issue. And David Jones have got to get back to offering a range like Zara does or a different consumer experience like Zara does.
Retail outlets are now pinning their hopes on a pickup around Christmas when shoppers are usually more willing to spend.